Welcome back to the channel, the Daily Forex. So in this video, we're going to be starting, the episode 1 on how to trade boom and crash indices successfully, okay? All right, guys, now we're going to begin on crash 500 index right now. We'll go over to crash 500 index, going onto the chart right now. All right. So we're on the crash 500 index market right here, and we want to pay a close attention on what the market is telling us, okay? Right here, what we're seeing that is that the market is at the overbought, but if we zoom out clearly, we can see where the price is at the moment, right? This is the 1 minute time frame. So what we do right now is I'll go over to the 1 hour time frame. This is what I will do. I'll go over to the 1 hour time frame right here. The market is at the oversold. So sometimes when the market is at the overbought on the 1 minute time frame, it does not always mean that the market should be at the overbought on the 1 hour time frame. But if there's a chance whereby on the 1 minute time frame the market is at the overbought, and on the 1 hour time frame the market is at the overbought as well, there's a higher chance that your trade will go 100%, perfect, right? Because the 1 minute and the 1 hour is in the same, time frame, okay? The same time frame, which is the overbought and the overbought on the 1 minute time frame as well. All right, what I'm seeing right here is that the market is at the oversold, and price at this point right here has bought for a certain amount of time. Market have bought for a certain amount of time. It sold and it bought. And if we take a look at the market trend, the market have been selling for a long period of time. Now, this market should be buying at this point right here, because the market have been in a bearish pattern, and right now is now going upwards, which is onto the bullish pattern as well. All right. So what I will do right here is to go over to the 1 minute time frame. Okay, I would place a sell on the 1 minute time frame. This is what I would do. I would place a sell, because the reason is that though the market is now going upwards to the overbought on the 1 minute time frame, on the 1 hour time frame, sorry, this doesn't mean that the market won't sell again. Because if you take a look at this point right here, the market bought, it sold, it bought, it sold, just like that. So now this market will buy and it will sell. Okay, it has bought, it sold, right? It bought, it sold, it bought, it sold, it bought, it will sell. All right, even though it will sell, it will still, going upwards, buying and selling, going upward trend, all right, to the bullish pattern. So this is the reason why I'm going to put on a sell. I'm going to look for a sell entry. This is a position whereby you want to look for a sell. Is because on the 1 minute time frame, the market has already gotten to the overbought. All right. So the market have gotten to the overbought right here. So we're expecting the market to drop in price movement. Okay. We're expecting the market to drop in price movement. So this is what you want to watch out for. Now, if I put on the RSI indicator, right here, which is the relative strength index, period 14, the levels on level of 19 and the level of 10, then the style on 4 pixels with the color black right there, the style right here color white on 1 pixels, then I'll click on done. All right, then I'll put on this MACD indicator just to show you guys how perfect what I'm talking about. So I'll put on the MACD, fast EMA 14, the slow EMA on 24, the MACD SMA on the level of 10, you apply to close. The main on color black on 4 pixels. The signal color red on 4 pixels. Then you click on done. If you take a look at this point right here, you can see that when this MACD got to this level of 90 right here, the market dropped in price movement, correct? And if you take a look at this point as well, price dropped in price movement at this point right here. Trace it down with me, guys. From here to that point, and if you trace it here, you can see even at this point right here, the market still dropped in price movement. Take a look at this point right here, the market dropped in price movement. Now trace it with me, guys, almost at the same level, which means during this point we do not need to wait until the MACD gets to the level of 90 before the price will drop in price movements. Okay, so you can see, right? So at this point right here, you want to look for a possible sell entry position. You should place a sell at this point so that you can get the spike. But before the spike would come in, the market will buy for a certain amount of time, probably after 5-10 candle tick before the spike might come into the market. but the spike will still come into the market at that point in time. All right, so if we check on the 5-minute time frame right here, the 5-minute time frame, you can see that the market has bought, so we're expecting the market to drop again. If you take a look at this point right here, the market bought, it sold, it bought, it sold, it bought, it sold, it bought, so it's going to sell. If we put on the moving average on the main window, the moving average right here on period 40 shift 0 method exponential, you apply to close the style on 3 pixels with the color purple, then you click on done. Take a look. The moving average right here is showing up that it's going towards this direction right here. Okay, it's going towards this direction, but it should, when it's going upwards to this point, because the 1 hour time frame is at the oversold, but it's going upwards. That's why you see that the moving average is following this upward trend. All right, but even though it's following this upward trend, does not mean that the market won't spike. Now take a look. The spike came in. Go over to the 1 minute time frame. You can see I told you guys that the spike would come in, right? And even if you see, like I said, you don't need to wait until the MACD get to the level of 90 before the spike come in into the market. Take a look at this. I showed you guys a perfect example of what I was talking about. Okay, it does not mean that the spike won't come. The spike would come, right? Remember that the market is already at the downside, which is at the oversold level on the 1 hour time frame. So the market is going upward trends, right, on the 1 hour time frame. So we're expecting the market to buy, right? But because on the we're on the 1 minute time frame, this is whereby we scalp the market on the 1 minute time frame, taking advantage of small price movement. That's why I told you guys that it's a perfect opportunity for you to place a sell just to scalp the market from that point. So when you go to the 1 hour time frame right now, on the 1 hour time frame, we're seeing that right here at this point, the market is buying right here, but it retested. If you zoom in a little bit, you can see that on the 1 hour time frame, the market retested downwards from this point right here. Let's zoom in a little bit so that you can see from here the market retested from this point towards this direction, right? And the market is buying right now, going towards the upward trend. That's why you saw that the spike that came in on the 1 minute time frame was a little spike. Okay, the spike that came in on the market was little because the market is already at the downside, which is at the oversold on the 1 hour time frame. All right, so you can see how perfect this trading analysis is. All right, on this episode 1 of how to trade boom and crash indices successfully. Now we'll go over to the boom market, and this is for crash market. We'll go over to the boom market. We're gonna go over to boom 500 index right now. Boom 500 index. I'm going to take away all the indicators right here. I'm going to remove them so that I can show you guys how to do this properly, right? Okay, on the 1 minute time frame on boom market, episode 1 on how to trade this market successfully. Okay, right here, what we're seeing is that the market is at the overbought, right? At the overbought. At this point right here, the market is at the overbought, and the market have started following this pattern whereby it's going to buy, sell, buy, sell, buy, sell, just like that for a particular period of time. How do we confirm this perfectly? Is by using the moving average. We'll put in the moving average on the main window. The moving averages, period 40, just the same parameters we use on the crash market. Method simple, apply to close. Style on 3 pixels, color purple, just like that. Then you click on done. Okay, make sure you shut this down, what I'm talking about. Now take a look at this point right here. The moving average is showing us that it's going towards this upward trend. Okay, towards the upward trend. This means that the markets are already at the upward trend. So we'll go back to the 1 hour time frame. The 1 hour time frame right here. All right, this is perfect. This is what I was talking about. The 1 hour time frame right here, you can see how the moving average is following this direction, buying and selling, just going like that for a certain period of time, for a certain short period of time. But it's going to go like this for a certain amount of time before it will retest. Okay, before it retests. Now when this market is like this, it's a little bit difficult for us to tell where the price is going, right? You can see it's a little bit difficult when the market is like this, it's a little bit difficult for you to tell the direction. So how do you know this? And how do you know which direction this market is going at this point in time? This is whereby you check the previous trend on the market. So we'll check the previous trend and we'll see what have been going in this market for a certain amount of time. So this is the previous trend, right? The market have sold for a very long period of time on the 1 hour time frame. Remember, it took days and many hours for this to happen. So it bought a little bit again, and now it started to sell. Then it's going straight towards this direction, right here, just like this, as you can see. So now we zoom in a little bit, and we're seeing that the market will buy. Okay, the market will buy and it will sell. So how do we check the next price movement from this point in time? This is all by put it in RSI. We put in the RSI, we put in the MACD so that we can see where the market is. So we put in the RSI, which is the relative strength index. The relative strength index right here, period 14. The same parameters we use on the crash market, level of 19 and the level of 10 for the levels. Then ignore this buy and sell right here. I normally use this on the crash market, but for the bull market, you want to put it the opposite. You put the buy at the top, which is the level of the 90, and the sell at the bottom of the level of 10. Then the style, 4 pixels color black with a straight line pattern. Then the style here, color white, done. Then we'll put on the indicator window 1 for MACD. Fast EMA 14, slow EMA 24, MACD SMA 10. Alright. The main color black, signal color red on all 4 pixels. Done. Okay. Now this is how we're going to tell where price is going at the moment in this market. So given that the market sold, it bought, it sold, it bought, it sold, it bought. So we're looking for a sell. We're looking for a sell on the 1 minute time frame. Okay, we're looking for a sell on the 1 minute time frame. So this trend market is a buy market. The reason I say that it's a buy is because the MACD went downwards towards the downward trend, and when the MACD is going towards the downward trend, the market tends to sell, right? If you take a look at this point right here, the market started to sell from here to this point, then it started to buy following the upward trend. Then the market will buy again because the MACD will now start creating an upward trend, just as it happened right here at this point. So this is a buy market, but we're looking for a sell entry. Let's go over to the 1 minute time frame. All right, this 1 minute time frame, we're looking for a sell, but before we're going to place a sell, we're going to wait for the market to buy first before you place a sell entry. The reason is that the market have sold for a particular period of time. You can see that the market have sold over 10 candlesticks right here. So there's a higher chance that the market will buy again before it will sell. Okay, to buy again before it will sell. On the 1 minute time frame, this market is going towards a downward trend. Let's zoom out. It's going towards a downward trend. And on the 1 hour time frame, the market is going towards the upward trend because the market have been selling for a long period of time on the 1 hour time frame. Okay, so I hope after watching this video you understand how to trade crash and boom using this market analysis on the crash and boom 500 index market. Okay, so if you found value, do well to like and subscribe to the channel, The Daily Forex, for more some trading tips and strategies. I'll see you guys on the next episode on how to trade boom and crash indices successfully.